Welcome to MOC. In this section, we'll be looking at how prices move. What moves prices in the market? If price moves from uh, $60,000 to $35,000, what is responsible for that move? If price moves from, let's say, $3,000 to as high as $60,000, what is usually responsible for those moves? Now, to understand how prices move, will completely change how you see the market. Now, the market is made up of players. The market will not move until there's an equal balance of players acting as buyers and sellers. So, on any centralized exchange that trades any kind of assets, in this case, we're looking at the asset Bitcoin, you always have buyers and sellers. Now, your buyers are referred to as the bid, then your sellers are referred to as the ask price. Now, these numbers that you see changing here is referred to as your order book, your order book. Order book meaning is a book that matches or merges those that are buying against those that are willing to sell. Now, prices move as a result of an imbalance in conviction between buyers and sellers. Now, for prices to move from, let's say, for prices to move from here, $35,000 and move back to $60,000, there must be an imbalance between the buying pressure and the selling pressure, and that imbalance will favor the buyers. It means that there are more people willing to buy Bitcoin irrespective of the price than those who are willing to sell. It means that there are less sellers. Whenever price is going up, it means that there are less sellers in the market. It means that everybody buying now is buying because they have hope that sometimes in the future they will have someone who will be willing to pay a more expensive price for the value of their Bitcoin. So that's the only way you make money in trading. You buy low and sell high. And the person who is buying from you at this high is hoping also that sometimes in the future, he or she will be able to find another buyer that will be willing to buy it at a higher price. So those people who bought at 60,000, for example, didn't buy because they were dumb, or they didn't buy because they didn't buy because they knew prices was going to go down. If they knew prices would start going down from $60,000, they wouldn't have bought. But they bought because they believed in their minds that, okay, from $60,000, price is going to start heading to $100,000, and when it gets to $100,000, they are going to sell and make a profit of $40,000. Now, that is the only reason why anybody will buy an asset. Now, the reverse is the case for those who are selling. Now, those who are selling their chunks, are those who feel at $60,000, there are no more buyers. I don't think there are other people, there are enough buyers willing to keep buying so that this price will keep going up. So there's now an imbalance in conviction on the sell side, because since there are not enough buyers, price will not be able to stabilize at this level. So the next thing price can do is to start going down. Now, how do you tell when price starts going down? You look at the order book. Now, the order book uh, matches volumes. Here, you're looking at the size in USD. So this is the size of the orders. These guys are okay. You can see it's changing from buy, sell. Now, these are the size of the transactions. So in this order book, they are matching the buyers and the sellers. So whenever you have more people willing to sell bigger volumes than you have more people willing to buy, then price starts going down. Why? It's a battle between buyers and sellers. So since there are more sellers, the price keeps going down. It keeps going down to a point where the sellers feel there's no more point selling. There's no point selling. We expect now that the buyers, that this Bitcoin is cheap enough, so it's going to start going up from here. Now, the reason why prices move is, that's one condition. Now, the second condition is that prices move because a heavy player in the market is moving the price. Now, every market has major players. In cryptocurrency, they are referred to as whales. They are referred to as whales, or the big banks. Do you understand? In the stock market, they are referred to as, or forex market, they are referred to as market makers. They push prices in the direction that they want. And what are the characteristics of whales or market makers? Number one is that they have a heavy stake or a heavy investment in the market. Investment that is big enough to shape prices in the direction that they want. Meaning, if a whale starts buying, he is buying with so much money that prices start responding and prices start going up. The same thing, when a whale starts selling, prices start responding and prices starts going down. Now, whales don't just buy and sell. They do so with coordinated activity. Why? Because everybody involved in trading is involved for the purpose of making profit. So whales plan their selling activities to coincide with news events. There's something called field, fear, uncertainty, and doubt. Now, whales create news that might be bad news. Do you understand? When prices have gone very high, sometimes you hear in the news they start saying, "Oh, China is banning Bitcoin." "Oh, Elon Musk says that Bitcoin is increasing carbon footprint. Why? Because it consumes too much electricity." "Oh, India has banned Bitcoin." "Oh, this billionaire said he's selling his Bitcoin." Oh, so you hear on news channels people will start saying that, "Oh, Bitcoin is dead. Bitcoin has crashed." Once you start hearing those news events, it adds to the fear of the ordinary investor. So it gives the big whales a cover for their activity. They had already planned to sell, but now the news is making it appear as though prices are going down because of the news. But on the contrary, prices are actually going down because the whale had already planned to sell, irrespective of the news. So people who blame Elon Musk or a big billionaire for selling don't understand how the game is played. Everybody involved in the game is involved to make profits, is involved because they are buying high for the purpose of they are buying for the purpose of selling later in the future. Do you understand? So if you are blaming them, then you don't understand how the game is played, and you're actually uh, shortchanging yourself. So what do you do now? When it gets to a bear market, you now hear all those bad news. Now, when Bitcoin has corrected by, let's say, 82%, then the narrative in the news media change. You now hear things like, "Oh, China has approved Bitcoin." You now hear things like, "Oh, this big billionaire is buying Bitcoin." Why? Because now prices are very cheap. So the billionaire has bought, the whales are buying back the Bitcoin that they sold. Now, some of this selling that you're seeing here, some of those whales started buying as far back as 2019, 2018. They started buying. The whales were the same guys that sold when price was at $20,000. They kept selling gradually until other people got frustrated too and started selling. Now, when price crashed, the whales will still be the same person, people to start buying. They keep buying and accumulating gradually. When they are done, they now start sponsoring campaigns in the media that tells you that, oh, they are launching a Bitcoin ETF, they are launching a Bitcoin fund, they are launching this about Bitcoin. Oh, China is accepting Bitcoin. Oh, this is happening. As all that news is coming out, the whales have already bought. So people who don't understand the game will now come in and start buying, will start buying. You now hear people in the news saying that, oh, Bitcoin is going to $200,000, it's going to $300,000. And as people are giving all those predictions that Bitcoin is going to $300,000, the whale or the big guys are gradually selling. They are gradually selling their stash. Why? They have bought very cheap. What is the rule again? You buy low, you sell high. So the whales have bought at a very low level. Now it's gotten to a point where they have made so much profit. Now they want to cash out. Why? Because some of these whales are companies that trade for people. So they are now cashing out to pay their investors or whatever to declare profit. So they now start selling. As they are selling, they are sponsoring propaganda on YouTube, on Twitter. They are the same people say, oh, Bitcoin is going to $200,000. Why? To get people excited to buy. And the people who don't understand the game will now come and start buying around these levels. 60,000. Why? Because they are excited that price is going to $200,000 or $100,000. Meanwhile, the whale is already like, oh, I've made enough profit. I'm okay. I can as well get out of the market. Because when the whale start getting out of the market, price will now start crashing. Then the money that they sold here, they will now use it to buy back cheaper. So if you're asking why is prices going down now, prices are going down. Why? Because people who bought cheap, something has climbed from like $3,000 to $60,000, and you expect that people will not take profits. People are taking profit. Why? Because they bought cheap. Come on, nobody is gonna keep Bitcoin forever. Why? Because nobody is going to live forever. Anyone that is buying Bitcoin now is buying Bitcoin because they plan to sell later in the future. So there's something called the greater fools theory. The greater fools theory says that in a market circle, there will always be someone left holding the bag, a greater fool. Why? Somebody bought at 3,000, we hope that they're going to sell at 10,000. Somebody bought at 10,000, we hope that they're going to sell at 50,000. Somebody bought at 50,000, we hope that they're going to sell at 60,000. Now, somebody is buying at 60,000 with the hope that they're going to sell at 100,000. Now, the person that bought at 60,000 just before price starts crashing is called the greater fool. Why? He came in late. You understand? So, but when you understand the game and you understand market circles and you understand why prices move, then you avoid things like FOMO. FOMO is the fear of missing out. You avoid FOMO and prepare to buy when people are not excited, when prices are really, really down and everybody's complaining and the market is quiet. That's when you will be buying. Why? Because you understand the game. Now, that is how prices move. For emphasis again, prices move as a result of an inconviction between buyers and sellers. You know, when there are more sellers, prices starts going down. When there are more buyers, prices starts going up. So the law of economics says that the higher the demand, the greater the value of the price. The higher the demand, price keeps going up. When demand is low and supply is much, price starts crashing. So as an investor, as a trader, it's now your duty to understand how to time these demand and supply cycles. And there are tricks that you can learn to help you prepare your own game plan to follow in the market. Some of those tricks are fundamentals, technical analysis that we'll learn in the course of the class. So we've come to the end of this topic, how prices move.